Ron Rothermel is the National Sales Manager of IHC Financial Group. He's a veteran of the Army, where he served from 74 to 80 and then worked for the Army Corps of Engineers before starting his financial career in 97. He's on the board of directors for 3 companies and served as president of Debit Advocates of America in Killeen, Texas, where he taught financial responsibility to military and civilian personnel. He's a licensed insurance agent and a national sales manager and a trainer at IHC Financial Group. And he made me extremely happy this morning when he agreed to come to my chapter at no cost to my chapter and give us a retirement seminar. So if y'all welcome Ron Rothermel.
Thank you. Am I on here? Thank you very much. And that offers to everybody. It's free of charge. We come out, we're a non-fee organization. Can everyone hear me okay? How about now? I can hear myself now. I need to move. Todd, if you would, when you get a chance, just pick a name out of there.
Pick a name?
Sure. Whoops. Pick my name. Figured we started off here with a winner.
Nathan. And I always forget how to say your last name, Nathan. I'm sorry.
Any Nathan gets $100.
Nathan in the room? Oh, missing $100. Should I pick another name?
It's up to you.
Yeah, well, it's up to you.
That's okay. Pick another name.
Then how? Oh, well, yeah. But is it
That's fine. Sure, why not? She's just going to take it anyway. Can you pass that down, please? Thank you. As I said, we're a non-fee-based organization. We specialize in training federal employees on your federal benefits. Understanding what your benefits are, how they work during the work years, how they work in retirement is very important. I heard that you guys like PowerPoint presentations. We have an hour's worth of presentations here, which will be cut to a half, so you'll see me skip over a lot of them. And I realize you just came out of lunch. Some of you may be lethargic, need to go to the restroom, so I'll go as quick as possible. Okay? The idea here is to at least create some interest. You don't know what you don't know. You need to find out what the information is. Has anybody seen this book before? Federal Employees Almanac. It's put out by Federal Employees News Digest. All of your information. They run about $25. We're not affiliated with them. This is where I get my information. However, you need a lot of time to go through it. And a sense of humor doesn't hurt. We've taken that information and put it into a workbook to where we can do a personal analysis of all of your benefits, show you what they'll do now, what they'll do in retirement, and give you options and a plan going into retirement. As I said, I'm going to skip through a lot of these slides here because of time. When to retire, Fers employees, anytime during the month. Once you put in your retirement paperwork, your effective date is the first of the next month, and your check will be dated the month following that. CSRS employees, you have a little bit of a benefit. If you retire the first, second, or third, your effective date is the next day, and your check will be dated the first of the next month. Some of you have heard OPM was backlogged on retirement, processing retirement. 90% of that problem is probably incomplete paperwork. So when you're a couple of years out, 2-3 years, you want to start putting together your paperwork for your retirement pack to make sure you have a complete packet. What will my cost be in retirement? How many here still have FIGLI, still carry FIGLI, Federal Employees Group Life Insurance? Yes, I do. Option B, still have that? When I go through that, it's a good plan. It's like any organization. You get a benefits packet. It is for everybody. You didn't have to take an exam. You didn't have to take a physical. Everybody gets the same benefit. That's called a group plan. Those of you who are healthy would do yourself a service by taking a look at what those benefits are, taking a look at a couple of different civilian companies. I'll go over those rates in a little bit. TSP options, There are a lot of different options out there. I keep getting feedback. Is everybody hearing me okay? A lot of different options out there. You can do what's called an in-service rollover, age 59 and a half or later while you're still working. You could roll your money out of TSP into a multitude of funds, multitude of financial plans, annuities. There's hundreds of different types of annuities. They become very confusing. However, we can walk you through that. There's a statistic, right? Everybody needs $1 million to retire or you can't retire. Any financial magazine you read, take 3% out, make sure it lasts if there's a bad year. You really don't need it. It's a statistic. And there we go, statistics and other myths. Mark Twain once said there's 3 types of lies: lies, damn lies, and statistics. Statistics is skewed. Every one of you are different. Everybody's situation will be different. One size doesn't fit all. That's why if you sit down with somebody, let them take your plan and work for you. Oops, lies. I was clicking, it didn't go. There's the damn lies, and there's the statistics. So now we'll get into statistics since we know what they are, right? You will spend between 20 and 25% of your life in retirement. So you need to make sure you make the right options as you go forward. You're not going to increase your salary. If anything, it's going to decrease. I'm walking too far. Inflation over the last 22 years, figure your money will buy about half. So by the time you retire, until your expected demise, sorry to use that, we're all going to live a lot longer, your buying power will decrease by half. You need to have some type of plan in place to make sure that whatever money you did have can continue to grow. Bank accounts produce a fraction of the income they used to generate. If you look here in 2007, $100,000 in a short-term CD would have generated $4,780, $190. It doesn't mean it's always going to go. Please don't let anybody preach doom. It's the end of the world unless you buy a product we have. We're a broker. We work with a multitude of companies, so our clients are our primary interest. We'll find what you need. I'm having a little clicker problem here. Social Security, I don't think for this group, but the average check's about $1,220. Everybody gets a statement about 3 months before your birth date every year. Nobody reads the front page. Everybody opens it up. How much do I get at 62? How much will I get at 60? I'm trying to get to my water without feedback. May I? Thank you. Read the front page. It's been there for the last 20 years. Social Security may run out. Every year it changes. They'll be paying 73 cents on the dollar by 2040, 74 cents on the dollar by 2018. It's a moving target, but it should give you an idea that things will change as we get older. So you just need to make sure that you prepare for yourself. If it doesn't, you're ahead of the game. If it does, at least you know what you needed to do. Probably our biggest cost now in retirement, advancement in medicine, medication. People are living longer. We're ending up in assisted living facilities, nursing homes. Those are very expensive. I think you had somebody speak to you yesterday about long-term care. Government offers a policy. It's a very good policy. Underwritten by John Hancock. If you're healthy, you can shop outside. That's a group policy also, so you could shop outside. John Hancock, for an example, could give you the same coverage if you're healthy that the government plan you would pay for just yourself that will cover you and your spouse. So you can cut costs. It doesn't cost anything to have run an analysis. It's definitely worth your time to look into it. TSP, 2005. If you annuitize your TSP for income, annuitizing means you can give them, in this case here, $200,000. They will pay you for the rest of your life. Okay, does anybody know, everybody understand annuities? We need to talk. An annuity, life insurance is in case you die too early, and annuities in case you live too long. When you annuitize, you can't outlive that income. They will pay you whatever that contract was for the rest of your life. There's different strategies involved. You could do a split annuity. You have 400,000 in TSP, take 200,000, put it in an account with what's called an income rider. That income rider will give you a guaranteed return, no loss. You let it run for the 10 years, it will double. Your other 200,000 you could use to live for that 10 years. So you use that 200,000 to live during the first 10 years. In the second 10 years, your account grew to where it was, and you could annuitize it at that time. It's just one strategy. You'll see here in 2005, an employee with 200,000 in TSP retires at 65 years old with spouse, would have gotten $1,476 for the rest of their life. By now, November 2012, that same amount would get you $930. When you annuitize, that's it for the rest of your life. Things to look at strategies. My biggest pet peeve, Figley option B. Asked it in the beginning. Again, it's a great policy. I spent 6 years in the military. I got a European out in Germany, worked for the U.S. Army Corps of Engineers as a civil servant. Was 24 years old, had a wife, had a child, didn't have life insurance. I was too young to even care about it at that point. I was invincible. Got a job, just as everyone did here with the government, and you got a benefits package, and it's great. And it eases your mind. You know you have the things you need to do, and you just go forward in your everyday work, and you work, and you work, and you work. What you need to know is the cost factor. When you're young, under 35 years old, let's say somebody has $75,000 of annual income, they take 5 times option B, $375,000. 35 years old, you're paying $16 a month. Every 5 years, the increment goes up. 24, 40, at 45 to 49, you're paying 64. As you get closer to retirement, this becomes very expensive. Some of you may have noticed that. You turned 50, your pay took a little dip. You turned 55, it takes a big dip. 50, you're at 105. At 55, 186. At 60, if you're looking to retire, that same 375 runs you $422 a month. 503, 926. If we're lucky to live those 20 extra years after retirement, 1950. It's a group plan. It needs to work its way out. Everybody got the same coverage. Whether you were a marathon runner and you ate vegetables all day, which obviously I don't, you didn't need to laugh at that. Or you're like me. We'll just take this. You're healthy over there, and me, I'm a smoker, diabetic. Well, I'm not a diabetic, I'm just adding that. I could be a cancer survivor. We're paying the same rates on a group plan. At 49 years old, which is the year before you turn 50, obviously, when it starts to increase dramatically, you will pay for this, and this goes without any salary increases. Because remember, every time you get an increase, you get more life insurance because it's based off your base pay. So you get older, it gets more expensive. You make more money, it gets more expensive. 20 years from 49 to 69, 49 to 69, $67,860 over the next 30 years. If you kept it in place, it would cost you $199,000. Most of us couldn't afford that. At 70, 75 years old, that might be a good portion of your retirement check. After taxes, might be all of it. Male STD is not some type of transmitted disease. It's standard. All right, let's get that straight. Get that out of your heads now. For this, we have somebody who could speak on that later. This is standard. I realized that after we did this, I'm sorry. Standard is, I could be standard without the smoking. I'm okay, right? You know, height, weight, fairly okay. Don't smoke. Have high blood pressure, but I'm taking a blood pressure pill, so it's controlled. I could have cholesterol. I would rate standard. I could lock in that rate at $111 a month for 20 years and save $41,000 over letting my Figley continue to build out. Obviously, over 30 years, the longer you lock something in, the more expensive it's going to be because the end game is You're betting you're going to go before it's over, and they're betting that you're going to live past it. $200 a month, it would save you $127,000 over 30 years. A male preferred plus 20 years, you're in good health, you took care of yourself, you're at $59 a month. That's less than what you'll pay at 50. Over the next 20 years, save you $53,000. Male preferred 30 years, $95 a month, less than you'll pay at 50 years old. Locked in for 30 years, you'd save $165,000. Understanding your benefits, what you have, how they work now, what they do in retirement is key to making sure you have more money in retirement. There's two things. You're going to have less income coming in. If your expenses continue to increase, you're going to have to give things up. There is good news for the females. You live longer, so your rates are cheaper. Too many women in here for me to say why they live longer, but men we know, right? You're looking at, I took a chance. $84.56 a month, and I'll just go through these real quick. Save $47,000 over 30 years, $149, save $149,000. Female preferred, this is where it kind of gets really interesting, if the clicker will work. There we go. $56,000 over 30 years, save $170,000, which you're at $199,000, so if you look at $81 a month for 30 years. Now, this is comparing a term to your FIGLE. Term means for a term of time, 20 years, 30 years. That might not fit what you need. You may have other obligations. Somebody might be married, spouse has a good income also. They really don't need each other's income, so why do they need life insurance? You may need less. You don't have kids to leave it to, even less than that. You may have a spouse who didn't work, doesn't have Social Security. They would need more. So you need to sit down with somebody who could explain, take your information, and give you options where maybe a term and a permanent policy would be better. Term is always cheaper. So if I was 50 years old and I could get a decent 30-year policy or even a 20-year policy, and I needed $300,000, I make a 200 term for 20 years. That would take me out to 70. At that point, my spouse would need less if I happened to go at that time. So then I could have a permanent for 100. So you can do mixtures on it. Worst thing to do, insurance is like Costco. The more you buy, the cheaper it is. And it goes in lots. It's called banding, and it's banding in lots of, the first band might be $150,000, the next $200,000, where you buy one insurance policy with company A, another one with company B, another one with company C. You have all the coverage you need, but you're paying top dollar because you have $100,000 here, $150,000 there, to where if you had $400,000 with one company, it would drive your price down. Not everybody needs everything, and that's what we look to do. We'll train, we do a personal analysis, we'll take your information, your base rate of pay, what benefits you have, we'll calculate out what your costs are now, what they'll be in retirement, we'll show you options, and again, those are free of charge. Looks like I'm an idiot. I am clicking, it's not moving. There we go. Test drive your retirement. This is something you really need to look into. 10 years out, you should have some type of game plan. I know we work a half hour to an hour a year to invest in your retirement, to look things over, look at your credit card debt. That's something that you definitely want gone by the time you get ready to retire. Some people will say pay off your house, go into retirement with no mortgage. Not everybody is the same. I'm not saying do one thing or the other. We're all different. Right now, with rates the way they are, I'm refinancing my home. It'll save me about $400 a month in payments. I may take that $400. I got a mortgage at 3%. I can save it at 5%. I might take that extra $400 and put it into a side account. In 2 years before I retire, I'm going to refinance that thing out to 30 years. Not leaving it to my kids. I'm lowering my payment. I still have a tax write-off, and that extra money that I was sweating to try and pay that mortgage off is money I could save to live on later. that's my philosophy. Doesn't have to be everybody else. You maybe agree with something different, pay the mortgage off and go into it with a clear conscience, that's okay, but have a plan. Understand that you do need to get rid of that credit card debt. 5 years out, whatever your goal was, have my credit card debt paid off, do whatever, reevaluate it. Now you're 5 years away from retirement. It's a moving target. It's constantly a moving target. Your needs are going to change. Your situation's going to change. Your investments might have did great. Maybe they didn't. You may need to regroup, but that's a good point to target. It's also a good point to start collecting all of your information for your retirement package. You don't have to go crazy, but just put a folder together, think of the things you need to get, start putting them together. 2 years out, I highly recommend this. Used to say 1 year. That's too close to retirement. You're 1 year out, and if I sat here and said for 3 months, live on what you're going to earn in retirement, that'll let you know if you're ready. Do it 2 years out because it's not as stressful. 1 year out, you're 7 months away, you try this, and you go, God, I got to go another 2 years. Things to consider in retirement. SERS employees, every extra year you put in, that's 2% more off your high 3 in retirement. Fers employees, that's an extra percent, unless you go to age 62. There's 2 calculations for Fers employees, is you bet your high 3 times 1% if you're under the age of 62, times 1.1% if you're 62 or older. So if you're at 61, and I'm not retention, I'm not trying to keep you working. I'm just saying it might be something to look at because that could be an extra 3%. Just going that extra half a year, that extra year, putting off your Social Security. Four things you need in retirement, obviously money, have a plan together, look what your options are, cut your costs. Your health, probably the most expensive things nowadays. It was easy way back during my grandfather, well, he lived till 85, but people just kind of kicked off really quick. They were gone. Now we're hanging around, lingering. There's medicine that'll help us with everything. The only problem is $1,000 a month for medication. I'm not going to pay that. I say it now. If I get it and $1,000's going to let me live, I'll probably pay it. So take care of yourself. Cut some of those bad habits. You're not going to go into retirement and sit on the rocking chair on the porch and go back and forth. You're just not going to live long. You need to get out, be active, stay active. Continue to maybe work part-time. Easy example, if I took a part-time job and earned $300 a week, part-time job, I would have to have $400,000 saved, taking that 3% out to equal that $300. To where maybe if I let that $400,000 continue to grow and I didn't start drawing on it too quick, that's the equivalent of $400 or $400,000 if I'm making $300 a week. So I can put off that retirement, let it grow a little bit longer, or not the retirement, but using my annuity, using my TSP. And network friends, engage in enjoyable activities. I tried to make it quick and easy. I know you guys sat through a brutal morning. Is everyone happy now? Happy retirement? This next slide was not my idea. My aide said that people probably wouldn't be happy after it. So I hope you're happy now. If you stop by my desk, or my desk, like I have an office here, if you stop by our table over there.
I'll get it for you.
Let me get over here. Let me hide over here. I lost it totally?
No.
All right, turn it off for a second.
Yeah, it's muted.
Thank you. Don't do that. Let me grab it while I'm here. If you filled one of these out, and a lot of you have, we will come out. We'll do the personal reviews for you. We'll also come out and do the training for you. If you haven't had the opportunity, I have some up here. You could drop them off at our desk at the next break. All right, and I need 2 volunteers. You can stay at your table, but you can stand up. But you can stay, but you can stand up. Stand up. All right, I moved. All right, I only picked 2 because it gets a little chaotic. What did Mark Twain say? How many types of lies are there and what are they? Since I know you guys are not incented to come by and fill us out for $100, I'll just give you the other one. All right, thank you for your time.